be with me a second here, but the real kicker is you have to answer your shareholders the question how to not only beat this setup or how to beat the benchmark. The only way you actually can outperform this benchmark is that you operate on the Bitcoin standard.
So today we're going to speak about 21 Capital, which is kind of the new kid on the block in the Bitcoin space. It's really interesting because 21 Capital is structured as a Bitcoin native public holding company formed through Cantor Equity Partners, a Nasdaq listed special purpose acquisition company and sponsored by Cantor Fitzgerald. There's also a very interesting combination of players involved because the majority ownership is with Tether and Bitfinex, and SoftBank Group will hold a substantial minority stake. So that is a really interesting combination in terms of players integrated in that venture.
Yeah, this new venture of SoftBank, Tether, Bitfinex, Cantor, led by Jack Mallers, who's the Strike CEO, well known in the community. And I would say appreciated also the community from most players in the Bitcoin scene. There's some massive news, and they announced a massive accumulated strategic reserve, or at least on the corporate level, that will be one of the largest privately held Bitcoin reserves worldwide. And it's a massive announcement. It certainly will move the market, like large MicroStrategy buys also move the market on a regular basis. And it will be interesting to see what is coming up in this regard.
So maybe you can level the field through talking a little bit about each party involved.
Yeah, I'm more than happy to do so, especially when it comes to the single players on the table. SoftBank and Cantor are the TradFi players, right? So SoftBank from Japan, they actually bring in massive expertise in banking, also massive funding opportunities, and even more important, they bring in access to very, very cheap fiat dominated in yen, the Japanese currency, obviously. And what is known as a yen carry trade, that is something that they will introduce here without going too much into details. To keep things simple, okay, SoftBank got the opportunity to print yen for around 0% interest rates, or more or less, right? And they can invest it in Bitcoin, certainly. So this is why it's called yen carry trade, because you actually loan nominated in yen and then buy assets which are then nominated in USD. And this is their superpower, and probably the reason why they're on the table. Similar to Cantor, they bring in TradFi or financial services, banking expertise. It's a boutique in the market, very well known in financial services industry for a long time, actually. And they also have an outreach in the recent Trump administration, where they're actually pro-Bitcoin legislation, which is super important here in the long run. Tether is a stablecoin. I would say after a couple of years of difficult starting time as one of the first and now major US dollar stablecoins, with a lot of dispute about their reserves in the very beginning, especially when it comes to the state of New York. It has been a couple of years ago, but now I think they're quite established stablecoin, though not recognized under MiCA in Europe. But this is not about Euro or the Europe region. Obviously, it's about the USD, and USDT is the stablecoin issued by Tether and the largest stablecoin. And very important strategic setup here, they are one of the largest single private buyers of US treasuries. Yeah, so they are also on the political level quite important. And this is why so close connections. Our last video was regarding the Stable Act, right? And this is exactly how everything is commingling and how everything comes together here. And their role is obviously as a major Bitcoin holder. So they bought, I think, in the region of 30,000 Bitcoin already in the past years. They accumulated a lot as a strategic reserve, but the majority still is in US treasuries. And obviously they want to have part of the cake here. So that are the roles, and led by Jack Mallers, who is also leading the payment startup Strike.
Okay, cool. So maybe you can elaborate a little bit about the yen carry trade. So maybe it's not clear for everyone why that is such a superpower.
How it works is that you loan in yen. So for instance, let's say you have 100 money units loaned in yen, and obviously around 0% interest rate. And thereby you buy a US dollar nominated asset. Could be real estate, could be stocks, very common also for entities like SoftBank to buy with cheap yen, buy US nominated stocks. in the equity market, any other asset, and same with Bitcoin. And if this asset appreciate more than the interest rate that you have to pay, which is easy because it's around 0%, then you make a financial gain. Careful, obviously, there's a risk if the yen devalues more than the asset appreciation, then you're screwed. And the game will work if the appreciation in asset Bitcoin will be more than the yen devaluation.
Yeah.
After interest rates.
Yeah. So it's basically bet on the appreciation of Bitcoin compared to the yen. So Tether, which is kind of famous for being a liquidity machine in the digital assets markets and having kind of interesting possibilities. Why do you think it's such a unique constellation? How do they play together?
Boiled down to one sentence, they tap into the majority of relevant liquidity pools. So they combine major liquidity pools in the market, made on the stablecoin side, made on the fiat side, and they have the industry or community backing in terms of they have players jack out of the industry, and this is a unique setup. And out of this unique setup, they can offer services that are unique in a way that they can be uniquely cheaper, like for instance other incumbents like Coinbase could offer them today, like lending, etc. I know that on X officially Jack is more or less announcing the use case of it will be in buy and hold strategy, and we will accumulate Bitcoin. This is the first and foremost strategy, but I think it will be much more than a copycat to MicroStrategy, right?
Yeah, maybe you can talk a little bit about how normal investments work. If you do large investments, normally you go through the banking system, right? And if you use Tether, use different rails, not the traditional banking systems, right?
This is one of the liquidity pools here, right? So typically when you have like a standard securities accumulating, especially on the debt instrument side, you accumulate on the secondary market via banks. So the issued debt from the primary markets is issued, usually dealt by major banks, the typical Wall Street usual suspects, and then dealt on the secondary market for the investors. Could be up to retail, but anyone who's interested in, for instance, buying this T-bills or whatever you fancy. And then it's distributed from there, but it's always settled in the fiat standard system, typically over SWIFT or similar setups internationally, or smaller systems. For instance, there's SEPA-like or Fedwire in the US that you can utilize for the system, and all fiat related. And what stablecoins typically provide you with is having these settlement rails on steroids.
Yep.
Steroids are instant settlement. Okay, so with you can immediately, whether it's a bond, whether it's another asset like Bitcoin, you can settle it immediately. What does that mean? Why is it important? And this is what everyone in Bitcoin and blockchain, the blockchain technology thing, is fancy about since 10 years. You can have instant intraday settlement, which means that you can exchange the one leg of the trade, which is the asset side, against the second leg, which is the money side or the cash side. So you exchange Bitcoin against cash, or exchange T-bill against cash, or stock against cash. This typically, now the point, this typically takes 2 or 3 days. That's how capital markets work today. And with stablecoin settlement, this works immediately. You directly for instance, in a smart contract setup, it mustn't be decentralized. It could be also centralized in a player like Tether or Bitfinex, for instance, as a marketplace. Remember, Tether is the issuer of stablecoin, and Bitfinex is the crypto exchange, one of the first in the market, so very, very early at least. And within these players, or in these instances, you can immediately change asset against cash. And it's immediately settled, so you don't have to wait like 3 days. And as a retail client, you might argue, okay, I don't mind whether my broker and my custodians, the CSDs and the ICSDs and everyone involved in these trades, whether they take 3 days to settle it or not. I don't mind. I'd see it immediately in my account. That's true effectively, but in the industry, it's the risk, especially the risk from going one part into the next part, is changing a lot when you settle that immediately intraday, right? And it's much faster and of course much cheaper process.
Yeah, I think it's really interesting to understand this real-time settling aspect, because normally, as you said, it's going through FedWire or something like this, where every huge investment anybody's doing to provide liquidity, and that is not needed anymore, right? So this is parallel rails away from the banking system, which are small at the moment, but are kind of interesting to watch. Do you see anything which could argue against that? Do you see any dangers there as well?
Yes, of course. It is a massive centralization, and everyone in the Bitcoin community is there for decentralization. Obviously, yes, it's a double-edged sword, but to play the role of devil's advocate here, centralization brings in efficiency, which is, yes, required for major players to be part of the party here, but it comes with a risk because you have another single point of failure potentially, right? This joint venture certainly could have a massive impact, but it certainly is a single point of failure. So this is one risk I see. This is from the centralization aspect. From the political aspect, you also create a form of, I'm hesitant to say a form of shadow banking, but when you leave traditional rails, you have a kind of shadow bank, and the idea is, at least from what we heard about 21 Capital, is to create a parallel universe on Bitcoin. This obviously comes with risk, in my opinion, and there my role as devil's advocate ends, of course. Since I'm pro Bitcoin, I see more benefits than risk accumulating.
Cool. And what are those? So what are the key benefits, do you think?
Yeah, it's a system to provide further services like lending or similar, like repo deals, which are very common standard in the financial industry, to provide that on a larger scale. Look, for instance, Coinbase doing that already, but maybe they have all the licenses, but they're not coming from a traditional background to actually do that. So their sweet spot is in particular the trading as a venue, maybe also the custody, but not additional services on top of it, like lending, etc. And this would be certainly the core benefit of a major solution, which are more or less trusted. I'm not naive and say, okay, you can 100% decentralize everything. You have certain forms of at least local communities, which are a form of centralization themselves, of course. This is also what we see technically in the Lightning Network, that liquidity is getting a bit more concentrated to be more efficient, still distributed amongst like 20,000 nodes, etc. And this is a similar effect is what we could see with like 21 Capital. We can elaborate more on the details, for instance, that there are now companies on top of like MSTR that writing options, for instance, where you can actually earn money in selling options on top of MicroStrategy, for instance. And I expect something similar with 21 Capital, where very complex capital markets evolve around that. But the $64,000 question here always is, what will be the first convincible setup to get big money from institutionals on the debt market? Okay, so crypto markets is fine with like 2 trillion market cap, but this is tiny in comparison to what we see in the debt markets. And the first player who got a very professional and attractive offering tap into the debt markets, that large pools, large pension funds, insurer, large banks tap into. This will be the key for the real institutional adoption. And you can argue, yes, MicroStrategy had already issued these kind of debt deals and bonds. Yes, more or less technically true, but it's special debt instruments. And yes, it's also true that major players like Deutsche Bank and Allianz already invested in MicroStrategy's bond issuances. True, but it's still a minority setup, right? And the first player who actually gets the tap into the real debt markets, I mean, not on the structured product side or not on any derivative side, but in the debt markets itself, in the bond markets itself, this will be the major transaction. I think the team around Cantor and SoftBank with Jack in the lead, they will be smart enough to do that, and they have the firepower to do that.
Yeah, cool. Makes sense. Is it true that you're actually replacing fiat or the US dollar as core of the financial interaction and transactions with Bitcoin? And that is actually what they built on. So what they said is that they actually measure their success in Bitcoin per share and Bitcoin rate of return. So they actually establish a small financial system based on Bitcoin, not on fiat. And then they take it from there and do develop financial instruments. At least that is what the rumors say. What do you think? Is that true?
Yeah, you tap here into a very important thought, because the real innovation is not that you have like a yen carry trade or stuff like that. The real innovation is that you have a new benchmark in the industry. You have a new index, basically. And when Bitcoin becomes, and this is not my words, it has been on mainstream media a lot for the last couple of months. This new benchmark means that companies have additional balance sheet gains. They don't have the P&L gains alone. They have the balance sheet gains. And when you think that through, next step is obviously, okay, what is my gain from my operational business and what is my gain from my Bitcoin position? And since Bitcoin, at least the last years, has an average growth of, I think it was 54%, yes. Could be 53, but it's definitely higher than 50% on average. This is hard to achieve with your P&L, yeah, with your traditional operational business. This was the same reason why Saylor was in that trap. He had two problems, right? Back then, it's well documented. What he mentioned is basically two things. So I have a lot of cash on my balance sheet. It's devalued by inflation. What should I do? And second thing is, how can I achieve these outstanding revenues or outstanding returns with only my operational business? Yeah, it was not possible. So he invented his Bitcoin single stock ETF, so to say, as the first in the market. The point is, and this is back to your question, to provide some context here, having companies and individuals starting to see Bitcoin as a new benchmark, and you can call that idealistically, but it is happening. People start considering Bitcoin as a new benchmark for their private and corporate investments. And I think that's true. Yeah? So every company that you found, for instance, that is newly started, and every company existing on the market will ask the question, am I able to compete with this benchmark, with more than 50% annual return? Like return not in yield, but return in asset growth, right? It's called price growth because the asset remains the same, to be very precise. One Bitcoin always remains one Bitcoin. I want to be very clear on this. Bitcoin is a new benchmark. You obviously will have to answer your investors, your shareholders, how the heck you can beat this benchmark. And the only way, I hope you can follow me to this point. Now comes the real kicker. Be with me a second here, but the real kicker is you have to answer your shareholders the question how to not only beat this setup or how to beat the benchmark. The only way you actually can outperform this benchmark is that you operate on the Bitcoin standard. Because only if you take Bitcoin on the balance sheet, if you take Bitcoin from your clients, you hold Bitcoin on the balance sheet, and your operational return or your company makes an additional return on top of this Bitcoin. Like your operational margin is like 10%, or 50% on Bitcoin, like 60%. This is the only way how you can outperform the new benchmark. And I say new benchmark, not because I'm dogmatic about a Bitcoin standard, but because I've heard what is going on and what is discussed in the markets, especially in the US right now.
Yeah. Cool. Thank you. And to actually take it back, because what we discussed in the beginning and the various players involved, they take this development actually one step further because they not just can do a reserve asset, but they actually can build the infrastructure, the financial system around this exchange with the stable coin and so on. So what do you think, what kind of Bitcoin native financial tools are possibly unlocked through for this combination of players? What do you think?
Yeah, in particular, combined with, we mentioned lending already, we mentioned swaps or exchanges, which is classical trading. This is the bread and butter business, obviously nothing crazy or nothing fancy. But on top of that, I certainly think that Jack Mallers will try to get his Strike payment business in there as well in some formal way. This certainly will unlock, I can't say endless opportunities, but a lot of opportunities in capital markets, especially when it comes to international adoption. Basically, if you combine what Strike is able and combine with the balance sheet of this new venture, in the long run, could actually have a new Swift on steroids. You can do remittance on that. You have larger payments with a lot of liquidity to facilitate that. Much beyond lending. Yeah, it's not limited to lending. It is corporate finance, trade finance, all alike. You can go into the decentralized finance aspects that you have a lot of bilateral liquidity, for instance, in automated market makers or DEXs or whatever you fancy. And this is certainly fueled by these ecosystems. Don't get me wrong, I'm not cheering to the centralization. I would rather see, and this is happening in parallel, to be honest, the grassroots movement that smaller protocols, for instance, like decentralized exchanges, there are a couple of one where you can buy Bitcoin even against fiat in a decentralized manner. So you're not dependent on centralized exchanges like Bitfinex or Coinbase. This is possible. And I also want to emphasize again, so no Bitcoin podcast without emphasizing not your keys, not your Bitcoin, right? So you have to do it in a self-custody way, safe self-custody. So that's the only way how you can really be sure that it is your Bitcoin, that you have access in a crisis, and that you, for instance, are safe. I think we elaborated a lot of services that they will offer or potentially can offer. But the very important point here is that Bitcoiners must really evaluate what makes sense for them and what doesn't make sense. And when you're lending Bitcoin, always you have to, I'm coming from a retail perspective, not from an institutional perspective. I don't assume that they want to have the retail investor anyway. And the retail investor itself doesn't want to go to 21 Capital, because certainly it would be too complicated, all that massive institutional grade KYC, AML rules. And so I think their target audience will be major other institutionals. Yes.
Yeah. What's interesting to watch is how they possibly push the ecosystem forward and the acceptance of Bitcoin, right?